Hi, for those of you that are new to the YouTube channel, my name's Josh. I'm from the Good Brothers Trading Academy, and I like breaking down technicals for you guys. So we're looking at BA today, BA today, and we are going to go into. I love the indecision bars on how that works, but this is the weekly time frame. Okay, I always start from the top-down approach, looking at the weekly time frame. First and foremost, what I start to look at is I go, okay, we have an indecision bar. BA is currently it pushed up nicely. We have this nice move down. We have this big strong reversal candle up, a sideways, and another push up. That kind of completes the pattern. We also got slammed down hard, so that tells me there's a lot of sellers in this area. Look how strong this sell bar was. Okay, so there's a lot of people that were keeping the stock price propped up here, and once it broke down, you always have those people, those back holders that are expecting it to bounce. They didn't want to cut their losses, but guess what? When it gets up to this 237, 240 price range, there are sellers there. They're just glad to get out of their positions, okay? And so let's get into the big, huge takeaway today, and that would be hitting the like button and subscribe and turn on that notification bell so you can be updated every single time you get new content. Now, let's go ahead and break out our 50% retracement tool. And if you notice, I like to bring out my retracement tool. Now, I don't sit there and use the Fibonacci all the time, but it's an awesome tool. It works. It's like a self-fulfilling prophecy, okay? So let's hit the like button again, and then let's go ahead and snap our Fibonacci tool at the pivot high and pivot low to just on this particular candle. I just want to see where 50% is. I don't care about the pivot high to the pivot low on the weekly. I'm trading within the weekly, right? So I'm trading within Monday, Tuesday, Wednesday, Thursday, Friday, and same thing with on the monthly. So depending on what week you're at, you're going to want to know those particular levels. I just want to see where the 50% retracement is on this particular indecision bar. If you haven't seen the way I play the indecision bar, I recommend it. I'll leave that in the description box below. And be sure to write comments to me, okay? Let me know what you guys think about this. Tell me how you use Fibonacci, or if you guys do not like Fibonacci, let me know, okay? If you don't believe in it. So let's go ahead and make a line right where the 50% is, and that would be right there. Okay, now let's delete our Fibonacci. I just wanted to see the measurement. And let's go down to a lower time frame. Here's the daily. And now what I wanted to show is the failure and talk about a little bit on where buyers and sellers are trapped. See, if you can begin, I don't think you can become a profitable trader until you understand the technicals and actually understand where there are sellers trapped in their position and where buyers are trapped in their position. You need to know the critical levels in order for the stock to make sense when they break those levels. So you can get a bias to the short side. Now, I'm not much of a buyer on BA all the time. It has to really be putting in something for me to become a buyer. And I will actually show you where that is on the weekly time frame before I would be a buyer in BA. A lot of people are anticipating for this stock to make a move. It's a good company, but with the pandemic and everything, there's nothing that says the stock has to turn around at this point. So we have this huge sell bar. We snapped our Fibonacci retracement line right halfway in the middle of the indecision bar on the weekly time frame. Now we know how crucial the 50% is on the indecision bar on the week on all time frames, right? But let's look and go down to the 3-hour time frame. We had this gap down, another indecision bar on the daily chart with a gap down. Now these were my buy zone, my sell zone, buy zones, supply and demand in the market. It's extremely important to find, at least I find it to be very useful, to find where your supply and demand zones are. We want to know where other buyers are going to show up, and we want to know where the sellers show up in the market, okay? So let's go and look at a 3-hour time frame, and this is what I really wanted to get into. Now we know where our 50% is. We have this incredible down day. We have a very nice move up in the market, like so, a bull flag, and this is kind of what's crazy. So we get the sell day to day, we get this recovery, a lot of buying coming up. But this is what I wanted to point out. Right here, let's get a draw tool real quick. Give me 1 second. Okay, we're holding the 50%. There are people watching the 50% retracement candle on that indecision bar. They want to see from the very top of this candle to the very bottom of the candle, they are paying attention to the 50% retracement. once we get above the 50% retracement, we have this buying right here. We have more buying right here, pushing us over the 50%. We find sellers in what we call the supply zone. There's a supply, there's an overabundance of shares, so then we find sellers. They're selling their position to make profit, or we're finding sellers because they're shorting the market because the stock price is high at 170, right? Here's the stock price right there. And we get these selling pressure. We can see the selling pressure coming in because we see all these wicks forming, okay? And as we get into the sell zone, we get underneath it. It retests the bottom of the sell zone. But what do we get right here? We get lots of buying, and then we get lots of selling. So they're fighting back and forth right at this 50%. The next day, we get a big sell candle, and then we get a recapture. Now, this is the important part. We get the recapture, which is terrific. We also find sellers at the top of the zone. Okay, that would make sense because that's a sell zone. We stay between our supply and our demand zone. But what did we do at the end of the day when we closed? We held 50%. So the chances when it holds 50% is greater to make a move higher, because that means on that day, or it would be yesterday, that means the bulls won the battle. We closed above. It's no coincidence at all when we close above a 50%, the 618, the 38.2, these specific retracement levels. If we close above these levels, even by a penny, okay, pennies matter in the market. If we close above by a penny, it matters. So what happens is you have people holding their position overnight. They expect it could possibly even gap higher and then make a move. It could open up and consolidate sideways, and then they expect to make a move, and maybe a consolidation, and maybe they're selling at the top of the big indecision bar. Okay, that would be another sign of resistance. Let's clear things up a little bit for us. Now this is what we really want to pay attention to. If they thought, and if people are in their position, you remember, there's people in their position here, there's people in their position here. We had buying pressure down here at the bottom. What happens when we gap down? All of these people, look where the price is at. Okay, right here, right here. We gapped underneath it. That means everybody that bought here, here, all the way through here, now are losing money when they wake up. So they are in pain in the market. Okay, they're losing money and they need to cut their loss because they don't want to cut their loss down here. They don't want to wait till there's another buy zone. They would rather take a small loss. If you know what you're doing, you'd rather take a small loss in the market. So we have funds buying this. We have intraday and day traders and swing traders. They are all buying and potentially holding at this point, okay? And what we want to see is we want to go, okay, if the bulls won the battle, but the bears won the war, then we can expect the price to make a move lower at this point. And probably, now we do have some buying pressure here. We have this pattern being put in here before we get this push up, a sideways pattern. It kind of goes like this, pushes up, we get more buying pressure, and it pushes the stock price higher, right? So it come down, and look where the buying pressure happened. It happened at the pattern. Okay, it's getting all messy again, but this is where the pattern worked out for us with the pole going up, the bull flag going sideways. We find a small, but that's a small demand zone for the stock because it was a supply zone. That's where we found sellers arguing back and forth. That's why we get the patterns, okay, back and forth. So it's no wonder why we're not getting a bounce here, because we got stuck here last time, right? So the point is that I'm trying to make, and I'll wrap this up, is we need to figure out where and who is winning. So if we look at this pattern and we break it down like we did, on the bigger time frame now, and we go, we have a push up, we have a consolidation sideways, and the bulls won the battle of the 50%. Now we have this bull flag. Why didn't it gap up? Why didn't it continue higher to the next resistance, completing the move, right? Instead, it gapped underneath. That would be a failure. We now understand that this right here, when it breaks the low of the flag, is indeed a failure to that pattern. That's what's so important of understanding of where your stop losses are at, where the technicals are at, and especially understanding where key levels of support and resistance or those buy and sell zones. We knew that once it gapped underneath, that is a short play. Okay. Now let's just look. I hadn't even done this, but let's look at even a smaller time frame real quick. I'm just curious to see what it looks like. Let's go to a 5-minute chart, and then we'll go down to a 1 minute. I want to see it kind of pop. It didn't give it much time at all. It just pretty much started selling off on the market on the open. Okay, so even when it tried to recover a little bit, we just opened up, had some buyers step in, sold it, and then we start getting a lot of selling pressure. Even when it started trying to recover, sellers were there just slapping the stock price back down. They weren't giving it much of any hope whatsoever. Now let's look at this bar right here, the opening range bar. And I get a lot into this in our Accelerator program. And people say don't try to sell stuff too early, this and that. I want to help you guys. If you guys want to learn how to read technicals, I suggest you get it. The Accelerator is really good. If you get it, while that link is still up there, I will actually give you the trading in a nutshell for free at no cost too. So let's put in this bottom, a top and a bottom of the range bar. Okay, so we get the top and the bottom, and we get this failure right at this. We get the failure, the push underneath. It comes down, and now we retest the bottom of the opening range bar. Right, get a reversal pattern. It continues to sell off. We're definitely getting this struggle here, so we could call this like a supply zone. Probably put a demand zone. Probably put it somewhere like this, and we could just watch it if we wanted to and make this an area. I'll delete this. But it is critical. You can watch that area. This is a smaller time frame. There's a lot of noise on the smaller time frames. Again, I like to trade the bigger time frames because we want to catch bigger moves in the market, especially when starting out. Doesn't it make more sense? And I've brought this up several times. It makes more sense if we're starting with a smaller dollar amount to catch bigger moves in the market so you can make more profit. Okay, but that means you have to be more patient in your trade. But you're also going to probably fall under the PDT rule. So why not just continue to do that? And I have a whole YouTube video and a lesson on that particular topic on how I feel about that, so I won't get too much further into it. But this would be the zone. We have this nice push down. We have a move up. A consolidation sideways, and now we failed and we're coming back down. So if we continue to fail, the stock price should continue. If we continue and hold this zone, well, there's a good chance that we may make it up into some higher prices for a while. We'll just see how it reacts. No big deal. Main takeaway is we want to know where buyers and sellers are trapped in our positions, and then we'll go from there. I'll see you in the next video. Again, I'm trying to make it to 1,000 subscribers. I want to break down the technicals for you guys. I want to break down the charts that you like, what tickers you like, and what stocks you're interested in. I want to help you out. Share it, comment. That way the algorithms can catch on. And I will see you in the next video.